Today's market call is presented by CME Group, where risk meets opportunity, and FactSet, financial data and analytics powered by tomorrow. It's a tad after 1 p.m. on the East Coast. That's my fault. I was having some tomfoolery prior to the show, but it is February 26th. It is Wednesday. Dan, if it's Wednesday, it's
Butters.
Bitch. Yes, it is, and I am looking forward to that. See the way I just jumped right in there? My timing is impeccable. We have a lot to talk about, but what we were saying prior to the show, we get on a few minutes before so we can set cameras and stuff. We're breaking down the sixth wall. There's been this little deterioration in the market since, I don't know, over the last 20 or so minutes. I don't want to make a huge deal out of it, but, the S&P, which at one point today I think was up at some 40 or so handles, has sort of paired its gains, and here we are flirting with where we opened on the day. The Dow Jones, which, again, not a great measure of anything, down on the day. So here we are, Dan.
You know that I don't, on my main FactSet page, I don't even have the Dow Jones anywhere. You can't find it. So look, Amanda's just Johnny on the spot.
She is tremendous.
Or Joni on the spot there with that S&P intraday. Our good friend Doug Cass from Seabreeze, he hit us right before the program. He's looking at the same stuff we are, guys. Some feeble bounces, as he said, and some key names, at least in the stock market. You and I have been keying on the Tesla, the Bitcoin, some of these other names that, you would have expected a bigger bounce after yesterday, and they are leading to the downside. So it'll be interesting to see. The NASDAQ, I think, was up 1.5%. So it's lost about 1% of those early gains. This would be a really, really, really bad reversal day if we were to see this thing go red.
I think so. And obviously, look, we're going to talk about the obvious in a few minutes in terms of what we're expecting after the close. But your point is well taken. And, what you see, if we're in the midst of what I think we could potentially be in the midst of, these sort of counter trend rallies can be fierce, but when they fade like they are, it sort of sends a bit of a message. Now, again, there's a lot of time left in the day. And obviously, regardless of what happens today, a lot could change in the aftermarket with Nvidia. I get that, but we can only speak in the here and now. In the here and now, maybe what we did this morning was work off a little of what people will say was an oversold condition over the last week or so, and now we're getting back on that merry-go-round to the downside. What I take some solace in, and I think you would agree with this, is the fact that the VIX, although higher than where we started the day, is still lower on the day, if that makes any sense.
The VIX, to me right now, is a bit weird. I don't know what story it's kind of telling. Late last week when we had that really bad day on Friday, I mean, we didn't even get that thing, I don't think, above 20. You know what I mean?
Mm-hmm.
And so, at the end of the day, I think it's some of these, the leaders and their lack of performance this year, and trying to figure out, we went back and forth between talking about staples and talking about pharma and some other stuff that was acting defensive. And, on a day like today, I see Coke and Pepsi down and Procter, and then I see pharma stocks down other than Lilly. So it'll be really interesting to see if the NASDAQ goes down in the day, if those things kind of go the other way. I just don't think so, because at this point we're getting a little exhausted. You're talking about counter trends, right? So you're talking, we're in a downtrend, a series of lower highs and lower lows, and we're just getting back up towards that downtrend, and we're failing. Where's the leadership going to come from? So that's why today after the close is very important. But Guy, you and I were talking about this earlier, and we've said this a lot. I mean, I think people said it for 4 years during Trump 1.0, and people have been saying it since the victory in November, that the president thinks about the stock market as some sort of proxy for his performance. And
report card is the term that was used.
And so this is really interesting, because we're talking about yields, and this is an Axios this morning. It just came out, and you and I were chatting about it. So they're focused more on the 10-year yield than they are on the stock market. This is what this article is saying, and Scott Besson has made some comments about the 10-year yield. So when you think of that, is that moving the goalposts? You know what I'm saying? Because again, we can make the argument that, this administration inherited a pretty good economy. They inherited unemployment at 4%. They inherited, GDP that was near 3%. I mean, there's a whole host of things, right? Inflation had been coming down. So the fact that, you have a stock market that's kind of been stuck in the mud a little bit, really since inauguration, maybe down a little bit, the focus on the 10-year, what does that mean to you by the administration?
Yeah, I don't think it's moving the goalpost as much as it is focusing on something that they think they can control, but I don't think they have any control over. And this is going to come down to, I believe, be careful what you wish for, because I think there's a school of thought that if rates were to go lower, that will take care of the stock market. So we should be focused on rates, because if rates move in the way we want them to, the stock market will cooperate in kind. I think that is the school of thought. I think that's flawed, but I think that's what the belief is. So I understand their need or their want to focus on yields, because they also believe lower yields are some sort of salve for the economy. I am not one of those people that believes that, by the way, although I can understand why some would. So if in fact they start their focus on the 10-year yield, the next question is, can they do anything about it? Now that's where it gets sort of interesting, I think. And I'm not convinced that they can, but obviously they're going to do whatever they can to try to get 10-year yields down to what they believe to be manageable, or were they to believe to be, beneficial for the economy and therefore the stock market. So this to me is an interesting, I don't want to say turn, but I think it's an interesting focus, because the stock market is something that can probably be manipulated by a lot of different things. Bond market is a little different, a lot bigger, and a lot of different factors going on. So in order to get yields where they want them, some deals are going to be needed to be made that, might work in the short term, but I don't think are necessarily all that advantageous in the long term.
Yeah, and the one thing I'd say about yields coming in the way they have, 4.8 to 4.3, Amanda made a slide. Let's just pull this up with the fateful 8 really quickly. And, all but Meta are down in the year. And you would think that this group of stocks with yields coming in would act a bit better, right? And so it just kind of shows you, in my opinion, kind of how offsides maybe those who really thought about this kind of relationship between long duration, high valuation, risk assets like this and the yield move, because we've seen yields all over the place over the last year and a half, right? On the 10-year, it's been very volatile for 2 years, and these stocks have been bottom left, upper right. So they've kind of hit a little bit of a snag, and you say, well, maybe it's not that much of a snag. Let's see what happens with Nvidia tonight after the close, and we'll talk about that more. But this is an area that I just think is kind of interesting, because we've had this 2-year bull market. A lot of folks think that this secular shift was going to continue to power lots of gains in 2025. But again, we have an S&P that's up 1% or 1.5%. We have a NASDAQ that's flat. Guy, do you want to look at the S&P E-minis here for a second?
Well, let's throw real quick, because Amanda made another fun little graphic. She's calling it the chip.
Oh, yeah.
I didn't even have to tell her what to do.
Yeah.
And the chip rip. Okay, so this is interesting. And, I can understand, and we can skip over this quickly, but we mentioned on an earlier podcast today that Jensen Huang, or Wang, I pronounced the name.
Jensen
Huang is going to be on with Jonathan Fort tonight, I believe at 7:00. So in the aftermath of earnings, he's doing an interview. I also saw on the Twitter that he is sitting down with Liz Claman tomorrow on Fox Business on her show. So I think one would connect those dots and say, okay, the only way he would agree to appear on any of these shows in the aftermath of earnings is if earnings are good, which they may in fact be. Now, his interpretation of what's good and the market's interpretation could be two very different things. So I understand why market participants are either squaring up or getting long or whatever they're doing in Nvidia and these other chips that Amanda had up. I totally get it. My point is, it's going to be really interesting to see if what he deems to be good is deemed to be in kind by the broader market.
Yeah, and so let's throw that slide up. And again, it wasn't just about chips. Like, we wanted to focus on Nvidia because that's obviously reporting tonight after the close. Broadcom joined the party late last year with the guidance that they gave. But, Dell and Supermicro are interesting because they are raging today. Supermicro for different reasons than Dell is. Maybe Dell is just kind of rallying a little bit in sympathy, but I think it's more rallying with what's going on in this kind of generative AI ecosystem. So, we wanted to put the server makers. We wanted to put Micron, which is the memory. There's a couple other angles that we could have put in there, but they are raging into this print tonight. And your point, excuse me, is a great one, because, I think of a lot of CEOs are kind of got a great handle on their companies and their fundamentals, and they are really good at talking about them. And some have a massive disconnect between what the stock is doing and what the investor perception is and the like, right? And so I get a sense, though, that Jensen Huang is one that has a good handle on both. Sorry, let me just get that. So when I think about this, I say to myself, he might be thinking that consensus is calling for a 5% revenue beat and a 5% revenue beat on the guidance, right, for the current quarter or something like that. And he might think, okay, well, we're solidly at like 6.5% or something like that, right? And he might think that's enough, right? And do they talk to investors ahead of time? No, they're in a blackout period. Do they talk to analysts before? No, they're in a blackout period. So when you think about what his expectations are for the stock, I could make a good argument why he thinks that they're going to disappoint the whisper number, and therefore he wants to go out and do an all-out assault. I could also make the assumption that he didn't give a shit whatsoever. He just wants to talk about the story because he knows he's got Blackwell coming, and he knows he's got Rubin after that, and he just wants to tell the story.
I think there's a lot of truth to all of that, but obviously, I think the read-through by the market is, he's got something good to say, and therefore we can't afford not to be ahead of this. With that said, let's take a look at Nvidia by the numbers. Another great little graphic that Amanda made. And here we are, 67% for the year, 1 year, not for this year, for the year in calendar days, 1 year, which is amazing. And the implied move is basically almost 10%, a little over 9%. Everybody's enthusiastic, 0 sells on the name. Out of the 68 analysts that cover it, 62 buys. I mean, listen, and with that said, given where the stock is trading, they've been right to be that way. But again, there's a lot, I think, for a lot of different reasons, there's a lot riding on this outcome. And if you recall, last quarter, the stock didn't move in the after hours. It was the next day where the stock decided to make an all-time high and then subsequently close on the lows and set up that reversal formation that we talked about then for weeks after.
Yeah, and this is a tricky one because 50% of their revenue comes from like 6 or so customers, and a lot of them we've already heard from: Microsoft, Google, Amazon, Meta. I'm missing a couple here. Tesla is a big one. OpenAI is a big one, right? And so we know that the CapEx plans are, they're growing. Maybe they're not as growing at the pace that they were from 22 to 23, 23 to 24, but there's still some big numbers. We talked a little bit offline about this headline from The Information about Meta, who's going to be building a new data center. It could cost $200 billion. You can figure out the math. That's at least tens of billions of dollars of GPUs coming from Nvidia. But at the same time, there's lots of concern about what the DeepSeek innovations meant for the sector, for training the models and the like here. So at the end of the day, this chart looks very different. Maybe Amanda can pull up a 4-year chart than it did in 23, than it did in 24. So things have stalled. I'm still in the camp. You're going to need a big beat and raise to get this thing above 150, like a big one, like double digits. You know what I mean? Like 10% in earnings and 10% in sales.
Gene Munster was on. He's been on with you. He was on Fast Money. He talked about what he envisions is a $2 billion beat for the quarter, and I think that would be from 38 billion to 40 billion, and a $2 billion raise for the next quarter, which I think takes it from 42 to 44 or around there. So, we'll see. But if he thinks that, obviously, that's in the market as well. By the way, we're 14 minutes into today's show, and a lot of people are saying, wait a second, it's Wednesday. I know it's Butters on Wednesday. That's obvious, but Elizabeth Young Thomas typically joins us on Wednesday as well. True. Elizabeth Young Thomas will be with us tomorrow, Dan. So I wanted to make sure to get that out.
Yeah, and just the last thing I'll say, on NVIDIA, we just don't have much more to add. We've been talking about it. Hopefully where we can add value is around the edges and some of the things that we've heard from some of their big customers or competitors and the like. And, listen, it's going to be a good quarter. It's going to be a good Q1, because even if DeepSeek caused some sort of trepidation by some of their big customers or the like, they didn't cancel orders for this quarter. You know what I'm saying? So again, it's going to come down to some commentary. I just say this: I am not convinced that Jensen taking a half an hour on CNBC, going into Shark Tank, this is at 7:00. They don't even have market coverage. I am not convinced because it's a blowout. Okay. I'll just say that right here. Guy, can we look at the E-minis now? The S&P 500?
Yeah, no, speaking of blowouts, let's take a look at the E-minis.
So I look at this, okay, and I say to myself, we did not make a new high, right? We've been making a nice consolidation up there. We haven't touched the 200-day moving average, and I want to say maybe Amanda can pull that out for a little bit
August
here.
of last year,
Yeah.
basically.
So, it's just, you've seen what's going on here. It's been really nice. That's a fall of 2023. Okay. So it maybe almost kissed it in August, on August 5th, on that day. It's a beautiful uptrend. I get it. And we're going to get to Butters. We're going to get to S&P earnings estimates in a few minutes here. But you could say this thing is still consolidating, and there's a scenario where, let's say it's a massive beat and raise, or it's the sort of number that just gives you confidence that the thing's not derailed, and Nvidia comes in a little bit, but the rest of the market acts okay. This thing could be back on its horse towards those prior highs, guy. I mean, like, it's kind of a tough press here is what I'm kind of getting at on the short side.
All right. So, Amanda, if you can do something for me, if you can go back to July of 2023 when the S&P made that high, and then see the pretty precipitous, okay, there. And then we had this pretty precipitous drop, and then go to April of 2024, and then you had this precipitous drop, and then go to basically there. Thank you. And then, so you see what happened. We had these huge moves to the upside. They didn't last long, and then you had a subsequent sell-off. Now you've had this huge move to the upside that has now lasted seemingly a couple of months. We've been sticking around here. So it's different in so much as it appears as though instead of spiking higher and selling off and then having the subsequent move back, we're starting to roll, right? We're starting to do some work here and starting to roll over. That is a much different formation than what we've seen over the last year. So that's the way I interpret this as well. So we'll see how it plays out. But you're right to point out the price action has been modest at best over the last couple of months.
All right. So, Amanda, now pull up a year-to-date chart, because I want to see the bars here. And, we were just, I think most of our listeners, our viewers know this. At 12:30, we do a call for fast money. It's the panelists, it's the hosts, it's the producers. We talk about some of the things that we all want to discuss on the show, some of the things that we think are interesting. And, one of our producers said, we'll probably start out the show with the S&P breaking its 4-day losing streak. Right? That was literally, 40 minutes ago or something like that. Look at the price action here. Okay. So you saw that one big down day. Okay. That was on Monday, right? You saw the next down day where we opened up a little bit, failed, close on the low. Today we opened up a little bit. Now we're trading, lower here. And you say to yourself, if this thing were to get going to the downside, guy, what's that number that you see, the low from basically, late December or so? I mean, that's probably where you're getting to in the futures. And I'm looking at that, and it's basically 5,800-ish or something like
57
that.
and change. But yeah, I'll round up for you and say 5,800. I think that's exactly right. So, here we are. And if you broaden that out, and you'll see exactly what we're looking at. And, this rolling over again, basically since December, if you really want to get down to it, it's interesting. It's something we haven't really seen a lot of over the last couple of years. And it's something that we'll continue to focus on. And I'll also throw in the fact that, although the VIX, Dan said it's been odd lately, and he's correct, there's clearly some things going on in terms of the VIX and obviously in individual names and the volatility that we're seeing that would suggest, we're sort of in the midst of something or at the precipice of something.
Yeah, I mean, again, is it a hard press to the short side? If you're using futures, you probably want to take a stab. You want to keep a really tight stop. I think that the hard thing about tonight with these earnings, it's going to be a kind of binary event, at least for the futures, at least on the opening, you know what I mean? That sort of thing, or the overnight session. Let's just pull up the NASDAQ 100 E-mini futures here for a second, because, this one looks a little different, guy. We had been talking about how the NASDAQ, and this is before, I want to say like a month ago, had not confirmed the new highs that had been made in the S&P 500. If you go back and you look where that high was, right? So here we are now. It had a sharper drop to the downside. We know why. We just threw up that fateful 8, graphic there. All of them are down except Meta or so. This one feels like that 21,000 level. You can just draw a horizontal line with your eyes. That one seems like the one that I'd rather take a crack at to the short side. Again, I don't think it's a great press here. Some might look at it and say, hey, listen, it's come down to the level where you actually want to take a shot to the upside, and then you're going to use a downside stop of 21,000 or so. So thoughts on the NASDAQ 100 futures? Does it look different to you?
Does look different to me, and I think it would also say it looks. I mean, I think this looks a little more vulnerable, to be honest with you. I mean, and I'm not trying to split hairs here because they're obviously very similar, but I do think there's more vulnerability here. And again, it comes with the obvious caveat of what we're about to hear in the next 4.5 hours or so. That's going to, I think, tell a big story. But what's interesting about this, and we talked about it, but it's worth bringing up. Look at it. Look at a Microsoft chart and go back a couple of years, Amanda, and you'll see. And I've talked about this. And I think if you didn't see it, you wouldn't believe it. But Microsoft made its all-time high last summer. I think it was July of last year. I mean, this is a stock that you would think, given what the broader market has done, this would have participated. It's not. And it's been rolling over. So that's something. And I know you love the SMH, but just bear with me for a second. Throw up an SMH chart as well. And it's the same thing. I mean, you would have thought that chips would be leading the way here, but that's the exact same chart. And now that's seemingly rolling over in the moving averages as well. So I bring that up with the NASDAQ in mind that, below the surface, there's some damage being done.
Yeah. And let's pull up Meta for a second here too. If you want to start with a 1 year, we didn't say it much because we're not trying to be those guys. We're not trying to be the guys who are going to rail against, like a move like this or whatever. It was a beautiful breakout from a technical perspective. It broke out on fundamental news, which was earnings print that was better than expected. Investors were okay with what they had to say about CapEx. There's an AI adoption story here. There's a hardware story where they're starting to make some of these, you have those Wayfarers. You do, by the way, you do have a pair of those Meta AI Wayfarers. I know you do because I saw you holding the box of them. Whether you've used them or not is another story.
So I want people to understand, unless they think that I went out and bought them for myself and then, making me a hypocrite. No, that's not what happened. When we went to the iConnections conference as a gift to us, we were given a pair of those glasses, which I have no idea where they are right now. I think they might be in one of my son's rooms, but they're clearly not with me.
They're pretty.
Swizzle is not. If you see me on the street wearing those things, and I say this with all sincerity, you have full rights to beat the shit out of me, to just knock me on my ass.
You want to be really careful
you can.
Because you are old school. You might be wearing an old pair of Wayfarers from like the Risky Business days. You know what I mean?
Yeah, no, but these have these you can tell because they're a little. I think they're a little wider. They're a little thicker, and they have little lights on them.
I have a pair. Bill has a pair. Amanda has a pair. Timmy has a pair. Okay. Jacob has a pair. We all have.
Everybody jumped off the Empire State Building. It's what my grandmother used to say. Little guy. If everybody jumped off, and I say with again full disclosure, I was not one of those people. By definition, I was not, a follower. I'm sort of a lone wolf, if you recall Jeff Mackey's moniker back in the day. Back to
also you. From The Hangover. Also the lone wolf from The Hangover.
Yes, but he found his wolf pack.
He did find his wolf pack. One of the best movies the last 20 years. Let's be
really
clear.
Is a good
All right, let's go back to the Meta for a second. I don't know how. Oh, we were talking about the Meta AI.
See, it's not my fault.
I know it's not your fault this time, but that run up, the breakout there, what was it, guy? 18 or 19 consecutive?
Yeah, it was basically every day from the inauguration, the stock went up until obviously, a week or so ago.
And maybe it's because their CEO founder is so cool. Maybe that had something to do with it. I don't know. But you look at this sort of move now on the downside and you say to yourself, well, it took out a lot of that in just a few trading days. And, it just shows how concentrated this trade is. I mean, have a ball. You see that uptrend from the July lows, maybe you get down towards that 200-day moving average or something that comes in at 625 or something like that. Sooner or later, I think folks are going to peel out of this one too, because that AI adoption theme that they've been able to harness and tell a story and kind of beat numbers on, at some point it kind of flattens out a little bit. So I don't know. I mean, we probably spent a little too much time on that, but guy, there's another earnings there's out after
this. Is an interesting one. This is sort of like below the surface. Salesforce is going to report, and it's interesting. And Amanda's got a graphic for this. Hasn't really done much. I get it. 9% implied move. If we want to pull up a chart, and I've been looking at this. I mean, Salesforce made an all-time high, Dan, I believe in December, around 369, and it's obviously pulled back. Now, what I'll tell you is if you were to draw a horizontal line across from November of 2021 was basically at 305. There you go. Here we are. So that coupled with the fact that we're right effectively at the 200-day moving average, this is a critical support. So it makes this quarter really important. Now, with all that said, Salesforce has surprised to the upside a number of different times, but just on a technical basis, I think it's imperative that they do it again.
Yeah, I mean, listen, and this goes back towards what's the next phase of this generative AI sort of build, right? So these companies, the hyperscalers, they built out the data centers, right? They trained the models, and then companies like Salesforce access those models right through their cloud providers. They figure out how to kind of integrate that technology across their suite of services, and then they try to charge more for it, right? There's a spread getting adoption from their customers of what their offerings are. So if they are not able to tell a story about the uptake of these generative AI products, then if you look at this company expected to grow earnings, let's call it 11% a year, 9% sales growth, that sort of thing, then you're going to have a hard time justifying the valuation at 30 times here, right? If you don't have a story about a higher margin product that you can sell after some of this investment. So, and they've been telling this story for 2 years. If Amanda wants to go back to the mid 2023, I mean, look what happened to this company. Look what happened to the stock. I mean, it got absolutely murdered. This is go back another year here, please. Look at that move. And a lot of companies were telling these stories, back in 23, and you had a huge gap lower, and then it's since come back as they started telling a better story. I don't think it was reflective that much in the numbers, but we know that Mark Benioff, the CEO of the company, is probably going to be on Jim Cramer tonight after the close. He tells a good story. He's one of the best software salesmen that's ever existed. So this one's not so easy to me on valuation, on fundamentals, on what they're kind of seeing as far as the integration of these products and services. And then the last thing, just on the technicals, like you got to hold $300 here. You got to hold that 200-day moving average, because you might be finding yourself on the way down to, what is that level, 260-ish or something like that?
Yeah, it's interesting, and you want to see the power of a double top. So if Amanda can draw the horizontal line across those double tops, from again, there you go. So just look at that for a second and say, okay, why do you talk about these double tops all the time? Well, look at what happened when we topped out again I think it was early 2024. Look at that precipitous drop from about 315 or so. I think we got down to about 204, and it pretty much did it, Dan, in a straight line. So that technical formation was very powerful. We subsequently traded back up to it, broke through it. So past resistance becomes support. And we're right here. I mean, let's not split hairs. I mean, here we are right at these critical levels. So you throw that all, as I said yesterday, in this cauldron, stir it up, and you have a really important quarter for the stock in terms of where it is technically.
Yeah. Before we get to some macro, and then of course Butters, let's look at the auto sector here. This is a big jump today in GM. I think at one point it was up 5%. So what are they doing? They're adding to their buyback. They're raising their dividend. Guy, are you surprised to see a move of that magnitude on that sort of announcement? Because on any given day, you could hear that sort of announcement from an S&P 500 company, and the stock could be unchanged. What does it tell you about the investor setup here?
To answer your question, am I surprised? No. Given the magnitude of the sell-off that we've seen in this stock over the last, I mean, think about it. This was I think it would trade at $60 in November. It might have been just short of 60. I mean, we went from 60 down to 45 in the course of, a couple months. So that was a pretty precipitous sell-off. So just any incremental good news, and you're going to get either a short covering rally or a new group of investors in the name. So it doesn't surprise me. Now, what's paramount is, do we hold this, or is this just another sort of false move to the upside? I actually think this one can get a little bit of legs, because if you look, we recently traded down to the lows we saw back in October of last year. So it's to me, it's a pretty obvious launching pad to maybe get up to, 53.5, 54, and then have another look. But no, it doesn't surprise me, and I do think there might be some legs here.
All right, let's quickly look at the EV stocks. One of the reasons why GM, Ford, they obviously had a tough time last year for a better part of the year, because as they were shifting their focuses away from EVs to hybrids. We just wanted to pull this up. And again, Tesla is the only one important to me on the US side here. You'd say, all right, it's down 25% on the year. Well, it should have never been trading at $480, $490, wherever it went to post the election, right? It nearly doubled. So here we are, a bunch of that give back. We can get into the fundamentals if we want. They suck. Let's just be really honest, okay? And we could just leave it at that. But let's look at BYD. This is one that Warren Buffett is a huge holder of. It's a Chinese EV maker. We've talked about it on the show before. The stock is trading at 52-week highs. They're basically creating an EV in China that's far less from the low end that Tesla. It's got a bigger range. It's got better tech. They update the look and feel of these cars more frequently, and they are giving away full self-driving for free. Okay, so that's BYD. One of the reasons why folks in Europe and also over here are considering huge tariffs on Chinese EVs, and Elon Musk said this, I think, a year ago or so. If there are not trade, whatever you want to say, trade blocks on Chinese EVs, they're going to destroy the market. He said that a year ago on one of their conference calls. He's gone back and forth, trade barriers, I was trying to think of. So look at BYD, what they've done. Look at XPeng. Okay, this one is up a lot today. When you look at those sorts of moves, and again, that's just the stock market. I get it, but these companies are taking a lot of share, and they're doing it on the low end, and they're doing it in places where a lot of consumers are getting very nationalistic tendencies. So I just think it's an interesting split screen again, Guy, between Chinese EVs and what's going on with Tesla.
People got to be careful, by the way. There's the BYD, Boyd Gaming. It's a completely different company than this BYD. And I think, if you just put BYD in, the first thing that's going to show up is Boyd Gaming. Completely different companies. But with that said, very similar looking charts. And, I think it was Elon Musk, I want to say maybe 6 or so months ago, he actually, I don't want to say he made an outreach to Warren Buffett because that would be disingenuous, but, he basically said something to the fact that, Warren Buffett should be taking a look at Tesla. Now, I'm sure that Warren Buffett has taken a look at Tesla and he's passed on it for whatever his reasons are, and he's chosen to put his chips in this basket, which I do think is interesting. And in terms of Tesla, and I want to be crystal clear, I've been right, I've been wrong. When they reported that quarter down, I think it was January 29th. I might be off by a day or so. I think the stock closed that day around 389. We talked about the quarter. It was the worst margins in 5 years. It was not at all interesting. As you have said a number of times, the free cash flow number, which was better by about $600 million, was on the back of marking up Bitcoin. So it went from 1.35 billion to 205 billion or thereabouts. And people got all excited because he talked about robo-taxis and full self-driving. The stock actually then subsequently went pretty significantly higher. And I was left scratching my head. Now, here we are. The levels that we're trading at now actually make sense on the back of that quarter. Now, again, I will say, 240-ish is a number we've talked about. That to me is support. We're obviously around 295 now. There is a level to buy this stock. I don't think we're there yet.
Yeah, and I think there's a level to buy it back if you're short. But I think about the fundamentals, and I think of there's a lot of stuff that has changed just since that report. Elon is spending a lot of time. I guess he was in a cabinet meeting today, overseeing. He was at the CPAC, which is this far right sort of get together, and he had. Did you see this? He had a chainsaw. He was doing this thing with a chainsaw on stage. I mean, this is just kind of turning a lot of people off here. So again, I think they're losing what would be normally a buyer of EVs. And then you're seeing just basically an all-out buying strike in Europe and possibly China too. So again, I think it does go back to 250. And maybe if you want to take a look there after it round trips that whole thing, have a ball. But I think this quarter is going to be a disaster. The only question is, we've got 1 month left in it, is that if it's pretty well telegraphed. Let's be clear. And then they're not going to report, I don't think, until, I don't know, mid to late April. So you got a lot of time here to play with this one. All right, Guy, we got to hit this last before we get to Butters, because I think it's a good segue here. We put up a little, we've seen these consumer confidence numbers. We've been talking about small business numbers. We've been seeing some of the kind of big ticket items, whether it be housing, whether it be autos, that sort of thing. You're seeing some stuff slow. And so we talked about the 10-year before. Is the 10-year moving lower because there are fears of recession again, or is it moving lower for other reasons here? Obviously, we talked about flight to quality and that sort of thing, but is this going to start to become a story here if we have higher PCE on Friday? Let's say we have lower jobs for February. That would be next week. Are we going to start seeing worries again about a weakening economy?
Danny Moses talked about this a while ago. He said that the days you have to really be concerned about are days where the market sells off and yields go lower in tandem. And we've actually seen a couple of those days over the last week and a half or 2 weeks. So he was right to point that out. In my opinion, if yields are going lower, it's that be careful what you wish for thing. Why are they going lower? Probably because things are slowing down a lot more than the market seems to realize, the market through the lens of the S&P 500. And again, this is an administration, as we sort of led the show with, that wants yields to be lower. Again, you have to be careful what you're wishing for, because if they do go lower, my sense is something bad is probably happening. Now, with that said, you get a number on Friday that can change this entire narrative in the form of PCE, right? So if that comes in hot, this whole thing could be flipped on its ear, where you have rising inflation, which, I still think is a problem, and you have slowing growth. And that goes back to this, as Doug Cass calls it, slugflation, but stagflation. And, again, Jerome Powell, I think a year or so ago, maybe a little bit less, when asked the question about stagflation, clever, or at least he thought he was clever, said, I see neither the stag nor the inflation. And I got to tell you something, to me, both are sort of there. So we'll see how this plays out, but it's something we should be talking more about for sure.
Yeah, and we mentioned that 5,800 level in the S&P 500. That was also basically the gap level from the day after the election, right? When people got excited about this kind of supposed pro-growth agenda. I think what's happening right now is that a lot of those expectations, there was a bit of a pull forward. You and I were talking about it in November and December. You saw a bit of that froth worked off in early January. Then they rallied again into inauguration. So, if some of the data is not going in the direction that a lot of investors thought because of this pro-growth agenda that's now seeing headwinds as it relates to trade and tariff and maybe inflation that's not going higher and a whole host of other things, then you say to yourself, well, we're probably going to fill in that gap, which leads me to the Russell 2000, right? So this is small caps. And again, we're not going to spend too much time on the merits of small caps, but we know that they're obviously a lot more sensitive to interest rates than some of the larger cap names. And that has filled in the whole gap. I mean, and it acts like unholy death. It's below its 200-day moving average. So when you see the relative weakness, Guy, in the Russell 2000, especially as you've heard a lot of people say, the market's broadening out. That's why the S&P is up on the year, while we've had a lot of those prior market leaders down a lot. Does this tell a different story?
Well, the Russell basically backs up the notion that rates are going lower because things are slowing down, because theoretically, the most economically sensitive names in a lower interest rate environment should be benefiting from it. It's not. And it's not, because I think rates are going lower on the back of a slowing economy. And it makes sense under those auspices or premises that IWM is going down and rates are going down. IWM is going down because things are probably slowing in a pretty material way.
No doubt about it. All right, here's some data that might help us get our arms around it from an earnings perspective. Guy, if it is Wednesday, we feature John Butters, the senior earnings insight analyst, and Amanda's going to get so mad at me. John Butters is the senior earnings analyst over there at FactSet. He writes the earnings insight blog. You can have it in your inbox on Friday mornings, factset.com/insight/subscribe. But we get a preview of it, Guy, on Wednesdays here. And so this is one of the things that, you and I have been talking about a lot in the back half of 2024. It seemed like that 2025 earnings expectations, year-over-year growth, about 13-14% or so, had not budged at all as we got through Q3, as we got through Q4. And now what John is kind of tracking is the first 2 months of this year and what's going on here. So let's just walk through this a little bit. The Q1 bottom-up EPS estimate for the S&P 500 has decreased by 3.6% during the first 2 months of the quarter, December 31 to February 25th. This decline is larger than the 5-year average, down 2.6%, and the 10-year average of 2.6% of the first 2 months of the quarter. So what do you make of that? Because it's happening, I think, obviously, from John's work at a quicker pace, but it's kind of happening all at once.
That's material. I mean, that's not insignificant. It's not like it's, 2.7 versus 2.6 over the last 5 or 10 years. So this is something to absolutely focus on. And for all the folks out there that thought you'd see this acceleration in earnings, well, at least for the first 2 months, we're not seeing it. And I know you hate when I bring up his name, but Larry Kudlow would talk about earnings being the mother's milk of the stock market, and you're just not getting it right now. So, in a stock market that was expensive in the first place, you needed earnings to cooperate. And at least for the first 2 months, you're not getting it.
Right. And let's look at the sectors here, because I think the graph on the right is really interesting. This is also the largest decline recorded during the first 2 months of a quarter since Q4 2023. It was down 5%. All 11 sectors recorded a decrease in EPS estimates, led by materials, down nearly 16%, and consumer discretionary. Now, those are two very different sectors. Let's break them down. Materials, that's your bailiwick here. What do you think's going on that you're seeing down nearly 16% year over year?
Well, I mean, again, it goes back to what your view of the economy is. I mean, theoretically, the material space, and that's a broad space, by the way, would be doing extraordinarily well if the economy was reaccelerating, right? I mean, growth in the economy should be led by materials and energy, and maybe to a certain extent, even you want to throw financials in the mix. And you're clearly not seeing it here. So, you can again, you can make numbers look and feel whatever they want, but the reality is when you look at this and say, again, the most economically sensitive sectors are not behaving, what does that tell you? It tells you something's going on, which again goes back to rates, which again goes back to be careful what you wish for.
Yeah, on the consumer discretionary front, I feel like it was like 6 months ago, and this is before some of the jockeying around, some of the CEO changes, but we had kind of gotten stuck on Starbucks, Nike, and Disney. These were three stocks that were acting very poorly in a raging bull market. Now we know that there was some kind of management changes, got people excited over there at a couple of those names, and there was a proxy battle going on with Disney, and then when that kind of came off, it started going higher. But I think just even in the last month or so, we're seeing articles about a day or a week or whatever at Disney is like massively unaffordable for most Americans, right? That sort of thing. So I think the discretionary thing is probably like a leading indicator. But if you look at consumer discretionary here in the US, at least that XLY ETF, it's just heavily skewed towards Tesla and Amazon. So it's not, and I don't think Amazon is particularly a discretionary. It seems more like a staple these days, Guy.
And before we get out of here, unless you want to wrap up, Butters, Bitcoin has taken another leg lower, below 85,000. So, I mean, there are obviously things going on that are sort of counter to what you would think would happen. Again, in a lower, and with rates going down, one would think that Bitcoin would be doing well, and it's obviously not. So there's something happening there. There's clearly something going on in the bond market. I mean, there are a lot of things at work here. And again, not to get, I'm not pretending to know anything about Bitcoin. I do not, but I can look at a chart and I can sort of put my finger up in the air and get where the wind is blowing. And right now the wind is blowing as if we're going to get down to those prior highs of 72,000. And, as MicroStrategies or strategies average price is approaching 70,000-ish, we're going to meet at some point. And I don't think that meeting is going to be obviously great for a strategy, but you wonder what it means for the broader market. And is that some sort of trigger? So stay tuned, sports fans.
Yeah, and the S&P futures, they just went down on the day. And, when we started talking at the beginning of the show, Tesla was down 2%, now it's down 3%. Apple was down 2%, now it's down 3%. Nvidia is 3%. Off of its recent highs. The fact that investors, Guy, are jockeying around in this Nvidia like this on a day like today in front of the print, it tells you that nobody knows anything here, right? And people are nervous, right? They were buying it this morning out of FOMO, and now they're selling it right now out of fear. Apple, again, why is this stock down 3%? Because there's a Trump headline, you know what I mean, that this company should abandon DEI. I want to be really clear about this. Well, all right, I'm not going to say what I was going to say. So the reason why I think Bitcoin, Tesla are important is because I think they are just a read on what kind of like the meme situation is right now, and it doesn't feel particularly good.
Lot to going to happen in the next few hours, and we actually started the show by saying, there was some things to be concerned about in terms of the way the market was behaving, and here we are. And by the way, Doug sent us an email earlier saying the action is not as good as people want to make it out to be. So, look, a lot of real estate left in the day. Nvidia after the bell, that'll be worth watching. Jensen Huang on CNBC at 7:00. So a lot to happen, but regardless of what happens, we'll be back tomorrow at 1:00 with the aforementioned Elizabeth Young Thomas, she of SoFi.
Yeah. Also, tune in tomorrow morning, the Risk Reversal podcast, Guy. I'm going to break down what we heard out of Nvidia on their conference call and what we heard from Jensen Huang on CNBC. So we will have all that covered. So check it out in your favorite podcast store. That's where you can find that podcast. And you can find this here on the YouTube. By the way, if you're watching this right now on YouTube and you have not subscribed to our channel on YouTube, please go do that. We'd appreciate it.
102,000 people have. Thanks, everybody. We'll see you tomorrow.
Thanks.